I am the non-banker in the room, which is quite interesting when you're trying to tell your son what you do, because as a portfolio manager or an asset manager, it's a little hard. My 5-year-old decided that I make numbers bigger, which I think is probably a fairly good start, as long as they're not red numbers and they're getting larger. Investing in Russia has given me experience of seeing red numbers get much bigger. Losses get larger and larger. I just put that up there to show that I am definitely not a banker. I was, in the 90s, helped Wes Edens and Pete Brigger invent CDOs. So I'm partly responsible at a very junior level for the whole crisis that developed a little later on. After that, went into hedge funds, and for the last few years I've been in Russia, where recently I took over some private equity funds. Private equity funds, as we can see on the next slide, there was large issuance of private equity funds up until the crisis. And then obviously issuance dropped off a cliff. Now I'm here to talk about some funds that I have that were basically bull market funds. They were launched in 2006, 2007, and they bought into Russian financial institutions, pre-crisis, we'll remember. So the prices paid were, by and large, a little on the high side. Now, 6 years later on, those funds are still alive, and I've been brought in to try and liquidate the investments so that we can give some money back to some investors who, as you can probably tell, are not particularly happy. The banks that we bought, and I'm going to talk about those, I thought probably best to talk about those specific banks, because it'll give you an insight into how Russian banks are doing generally. Cover a vast spectrum. They're federal, they're regional, they vary in quality for them, very, very high quality, that would be blue chip in Western Europe, to the absolutely poor. But before I go into that, just a couple of notes. One of the things that we saw earlier on was the cash build-up. Eric talked about, the cash balances that are on corporate balance sheets. The one thing I would say is QE, and QE. When corporates can issue bonds, 5%, 10 years, why on earth would you ever go to a bank? Why would you trust a bank? Another crisis comes, liquidity cut. One of the reasons why there's so much cash is because there's been so much issuance. Banks are being disintermediated. Another thing about banking, and I can be fairly frank because I'm not the banker, this is the future of banking. In Africa, one of the fastest banking growth regions in the world, Nigeria specifically, this is the future. If you go to some remote part of Africa, there'll be some guy sitting on a Fanta crate with a mobile phone and a wind-up charger, and money transfers will be done through telephones. This is the way forward. If you're going to build a banking network, would you really build a branch network? It's a real estate business. It's not a banking business. So yeah, I completely agree. Corporate debt issuance, though, we've got to be very careful of. And I'll just very briefly say, one of the real bugbears for me is that we have a huge amount of junk companies that would never be able to borrow from banks, that are able to go to the capital markets, borrow at extremely low rates, and pay out dividends. We've got a huge amount of corporate issuance for dividends, which is just junk. And the banking environment would never allow them to do that. So one of the good things about the banking environment is that there is a little bit of due diligence over the top, and hopefully some stupid things don't get done. And those bonds that have been issued will come back to bite us. So I overlaid the MSCI World on that, so you can see why there's been no real issuance of any private equity funds since then. As you can see, basically languished. And the only ones that are really growing are the distressed private equity funds. So funds that have been set up to go in and buy other private equity funds. Russia. Now, Russia is really it's a two-tier banking sector. There's the state, and then there's the rest. Look at the top 6 Russian banks account for 53% of deposits. And as one luminary on the panel said, State banks are like a bulldozer with their brakes off. VTB and Sberbank are growing at insane rates. They are there for quasi-political reasons. The banking reasons are almost secondary. VTB capital is losing money hand over fist. VTB and Sberbank NPLs are going through the roof, and yet it does not matter. They keep being financed by the state, and more recently by sovereign wealth funds. And they are completely separate from the rest of the banking sector. My banks are, I wish I owned VTB or Sberbank, at least I get 0.9 book. My banks are very, very small. Now, in Russia, there are 1,000 banks. There used to be 2,000. But of those, only 50 are really significant. Only 50 really matter. And once you get outside that, you have to be very, very careful. And what's happening with those banks, it gives a real indication of what's going on in the real economy. One of the things that I would like to touch on is obviously efficiency, and I've only got 10 to 15 minutes. So efficiency is something that, I don't know how many of you have been to a Russian bank, but if you go in, and I couldn't believe it the first time I went to take money out, I had to go and get something, take a piece of paper and get it stamped, move across to somebody else who would stamp something else. It's not necessarily the most efficient method of banking. If I had a ruble for every stamp that I've had in my time in Russia, I would be a very wealthy man. And also trustworthy. Now, VTB and Sberbank, Gazprom Bank, Agricultural Bank, large pan-federal banks that have a stamp of approval. We know that Russia has enormous FX reserves, and we know that the government would use them to shore up any banking crisis. So the large banks are extremely trustworthy. But once you get out of that, how trustworthy are the smaller banks? It's just a little couple of slides on, as you can see, the largest banks, state banks are obviously in orange, and then the private banks are in green. Interesting how few of the global banks have started to really penetrate Russia. We saw Barclays come in, try and penetrate, and then left. That was the best deal. That was the best deal that Expo Bank have ever done. Came in, and the guys selling to Barclays sold at 4 times book. Those of you that know that, those of you who know Russia multiples will know that that's insane. Expo Bank obviously became Barclays Bank, and now has been sold back to them, and they are moving on forward. If we look by, sorry, that was credit portfolios, top 5, 55%. Deposits, again, same situation. We have state banks totally dominating. It's a fairly farcical thing. Moving on. Now this is where it gets more interesting. These are the banks that I own. Now I've been looking after these for quite a while now. One of the things that with these banks is I have minority stakes. Those of you that know Russia know that owning minority stakes in anything is not necessarily a good thing. Owning a minority stake in a financial instrument is even worse. So for the first 9 months or so of my life, I suddenly thought, I'll get to know these banks. I buy things and I sell them for more money, hopefully. So let me go in and understand these banks. Now, one of the things that the Russian banking sector, as we've heard earlier, was going through rapid growth. Loan growth was at 25% per annum for a number of years. The Russian consumer was vibrant. Well, I'll tell you something now. The Russian consumer accounts for 52% of Russian GDP. Everybody talks about oil and gas, but it's not necessarily the case. The Russian consumer is rapidly growing. By 2019, Russia will be the largest consumer economy in Europe, overtaking Germany. Russia, if it continued that way, would be into US-type levels of consumer as a percentage of GDP. Now, that's fine. The economy is growing, commodity prices are growing. Consumer can, let's all not forget, in the 90s, there was the largest ever giveaway of capital when the Russian government gave away all its housing stock back to its people. It was the largest giveaway of capital. So the consumer was able to borrow against that as they felt more comfortable. And we've seen the consumer starting to borrow against his housing stock And we've seen the rise of the Russian consumer. If you go to Russia and look around, the number of new cars is insane. I couldn't believe it. When I first went to Moscow, you know, I used to like some of the cars on the streets, and then all of a sudden they're so popular. All of a sudden, it's like, no, I don't like it now. Bentleys, who needs a Bentley anymore? Seriously, it's the girlfriend car. But one of the things that we've seen, or I've specifically seen over the last 6 months, is a deterioration in the Russian banking sector. Banks 1 to 9 represent pan-federal and regional, and varying quality from the exceptional. And I'll tell you which bank is my favorite on there. My favorite bank on there is number 2. Number 2 is a very solid, very well run bank where management are highly Western style, highly efficient, respect shareholder rights, and are trying to grow their bank for IPO. Now, that's great. I don't know if you saw last year, but there weren't that many IPOs in Russia. One of them was an independent oil company, and there weren't any financial institutions there. So this is a great bank that I have a stake in that would like to IPO and probably won't. But its underlying metrics are good. It's been growing at 25% per annum ROE. And we talked about how people were focusing on these ratios. ROE and ROA are focused on like you can't even imagine. NPL obviously is something that we'll start to consider more, but in growth times, those are the only things that matter. That bank is stellar. One of the things that's happened in the last few months is that those numbers have actually declined. Russia, as commodity prices have stagnated, as it's having to offer discounts on gas prices, is struggling. All my banks, the high-quality banks especially, have reined in their loan growth. That's one of the things that I've seen. The quality banks are reining in their loan growth, and the only banks within my portfolio, and I talk to many other owners of banks and investors in banks, the only banks that are growing their loan portfolio are the poorer quality banks. The poorer quality banks are picking up the slack. But the one thing that this is showing us is that highly skilled, well-run banks are reining in loan growth, being picked up by the poorer banks. That is only going to end in disaster because the poorer banks don't control credit quality. They don't have great servicing, which means that their NPLs will start going through the roof. My serious concern is that the rapid expansion of the poorer banks, and I see it in the deterioration of capital adequacy in those banks. So there are a couple of banks in there. There's one with bank with 10.2. That's declining all the time, and it's not going to be very long before the Central Bank of Moscow goes in there and says basically stop writing. But the 10.2 is, if you look at it still, it's bank 5. If you look at it still, its ROA is 1.1 and its ROE is 14.2. You can see that it's not as well run. Its cost base is not as high. It's not as efficient. It doesn't have high qualities of underwriting. And if you look at the Russian banking sector as a sector, the red numbers at the bottom, you can see, if I was to show that to some Western bankers, they'd be quite happy with that. 1.9 ROA, that's pretty decent. But the underlying trend is down. And it's down significantly in the first quarter of this year. The first quarter of this year, we saw a substantial decline in deposits. We saw an increase in NPLs. We saw an increase in loans, but the loans, as I said, were from the poorer quality banks. So, implications. One of the things that's actually quite good is the CBR. I hate to say it, but the Russian Central Bank have put in some fairly strict capital adequacy rules, but better still, their monitoring of it is actually really quite good. This is a trader speaking about Russian bureaucracy. It's actually, they go in and they identify problem banks, and they are quite strict in the way they say stop writing loans now. One of the things that I think will necessarily follow, and I know we talked about global banks and how there was a shift in their asset portfolios. I think within Russia, which is obviously the largest landmass on the planet, stretches from Japan through to Europe. I actually debate whether a myriad of regional banks is necessarily going to survive. I think what will happen is that the large, as we've said, the large state banks are the bulldozers pushing forward. The smaller regional banks, unless they have a very strong brand, will probably fade away. We saw this in the 70s and 80s in the UK, where we had a large number of building societies and smaller banks that ended up merging. I think this is necessarily the way, especially as we've seen many of the foreign banks exit the Russian market. And so we'll see consolidation from 900,000 Russian banks, and that'll be shrinking down even further. One of the things that's actually happening is the central bank is getting rid of the trophy assets. So in the 90s and noughties, it was often all an oligarch, minigarch, or babygarch wanted was to actually own a bank because it was a trophy, and that's been got rid of. One of the things that we do see is, or one of the things I see all the time by going into my banks, if I can't sell them, I may as well try and make them as efficient as possible. Try and get some dividend income out of them. And some of them do pay dividends. The dividend yield is actually not bad. But one of the things that is almost universal is that there are huge efficiencies to be had. I spend a lot of my time going in and talking about underwriting, talking about what they're doing to teach their sales force to try and get servicing good. My days at BlackRock, when I was buying distressed housing debt, I would always make the servicer co-invest with me. When the servicer had an investment, a physical investment in the portfolio of loans, he was much better at getting cash. Now, one of the things I've been talking to the banks is outsourcing the collections and making the servicer take a co-investment with you. So you're not selling your entire loan book, but you're selling a little piece of it. All of a sudden, we've talked to one bank that actually did it. We saw collections go through the roof. NPL start to come under control. This is one of the things that we try and do. We try and work with them a lot. But the room for efficiencies is just enormous, especially in the regional banks. And then again, there's VTB as well, Spare Bank. I mean, it's just disastrous when you talk to some of the guys in Spare Bank. And then, obviously, the elephant in the room is the state versus the private banks. And the state is becoming ever larger. It will become ever larger, and that threatens the existence of the smaller banks, which isn't necessarily good for me, because I hold minority stakes in these smaller banks. I'm trying to get out of them. It's a little difficult. One of the things that just as an aside, one of the only methods of getting out is actually to stake build. So I spend quite a large amount of my time meeting with other minorities. So where I have 3.6% of a bank, I've now just launched a structured sale process of that where I've got 27%. So I gathered around a whole bunch of minorities that were relatively unhappy with present management, and I've been able to launch that. And that's the third largest bank in Russia by branch network. So there are things you can do. You've still got to hope somebody buys it. And that bank, again, as another aside, has a treasury department that thinks buying and selling Google or Apple shares is part of its banking process. Now, call me a bluff old traditionalist, but banks punting on US share prices in Russia is not necessarily going to enhance the value of that bank. And in the first quarter of this year, it did lose a bucket load and actually went into negative profit. And it was, as a result, my structured sale process had come to a grinding halt. But one of the problems with Russian banks, and this is a common theme. Often you'll have a very good bank that's very good at writing loans and good at taking in deposits, but it'll do something stupid. I have one bank in the regions that has net income margin that you would die for. It's a super bank. It's got capital adequacy of 17%. The problem with it is it doesn't know how to sell anything else. It's just good at taking in money and loaning it out. And so I'm working with them to try and get them to start doing other things. One of the things that that Russian banks necessarily need to do is start to think about how they can improve market share in all other areas, something that would come very naturally to a lot of the Western banks who have been pressured, who realize that banking is becoming commoditized, and this extra fee income is something that is very valuable and something that they need to go after. And then what I've done is I've just, for your reference, basically, I've just put some of the banks. These are not all the banks because you might be able to tell who they are. So I've put in some extra banks and taken some banks out so you can't know what my portfolio is. But you can see that, you know, these are, I've just put in the 2012 numbers now, which finally banks have given me IFRS numbers. And I talk through some, that's my favorite bank, as I said. I will actually tell you the name of that bank. That's Rossiyevrobank. That is probably one of the best run private banks in Russia. Management have significant control, and they're, as I said, they're looking to IPO. But as you can see, you know, its ROE is growing strongly. Its ROA is growing strongly. It's just a really stellar bank. This bank is actually a dire bank. This bank was owned by a Russian guy who actually owned a couple of Latvian banks that went belly up and is not very welcome in the European Union. I ended up taking control of a significant number of shares in this bank. Management, as you can see in the early years, made management using this as a piggy bank, which is often the case with a whole bunch of Russian banks. We talked about corporate governance, corruption. A large number of people believe, or a large number of majority owners of Russian banks believe that the assets of the bank belong to them. And this is not the case. The equity of that bank belongs to them. And there is a massive difference. And in those 1,000 banks, you have a large number of people that believe that it's the assets that they can do whatever they want with. Corporate governance is something that massively needs to improve. As you can see, the corporate governance on that bank was dire. Actually, in 2012, they put in new management. CEO of the bank now is used to be part of the CBR. The new beneficial owners are connected. Their creature is quite well-to-do, and as a result, that bank is turning around. But it is it's a multi-year story for anybody that wants to exit. But I put those in there for your perusal, so you can see that the type of banks that you see. There's a pan-federal bank. I don't own a huge amount of that. And then a whole bunch of other regional ones. One of the things I put the map on, because when I moved to Russia, I knew nothing about Russian geography. So I put the map on. I had this little flip book, and I'm wondering who I can sell them to. So if I saw a bit of blue, and then there was they were just in one place, and then there was no blue elsewhere, I would go knocking on the door of that bank saying, I have a bank for you. But yeah, so there's some interesting things there, just about the Russian banks. But one of the things, the takeaway I would leave for you is that the banking sector was unbelievably robust up through 2012. I have seen significant drawdown in 2013, and the only banks that are picking up the slack are the ones that shouldn't. So I would leave you with, beware, Russian banks are not particularly strong. Most of the refinancing done that the consumer is doing is going to refinance existing debt, and this is not good for the Russian economy as a whole. Thank you.
You mentioned this business about bonds and how they've disintermediated the banks, and it just occurs to me in the afternoon we're going to be spending time talking about regulation. Well, of course, all this stuff, you know, if it's not going through the banks' balance sheets, but the banks are the ones being regulated, what's that going to do, as you mentioned, to, you know, the safety of the system, which I guess, you know, it could be a cause of concern. Would you agree with that?
Oh, I completely agree. I mean, you know, I mean, it's not just the corporate market. I mean, the sovereign market. If you've got Mongolia borrowing at 5.5%, that's just bananas. Bangladesh just issued, you know, a bond at, you know, I think it was 6%. That's basically a floodplain. One of the major concerns for me as a guy that runs real money is the potential for increases in defaults in corporates, in sovereigns, but specifically in corporates. I mean, with the high yield market and the junk market in the US, the issuance has gone insane because rates are so low. The number of defaults is not necessarily high, but we all know that QE is going to slowly be weaned off us, you know, and as a result, we'll see rates rise. I think you'll see a corresponding spike in number of defaults, and it won't be the bank to blame. It's the corporates. It's the corporates. It's the addict and the supplier. You know, the banks are just the supplier. The corporates are the people that need to be weaned off this thing. But yeah, no, it's systemic risk within corporates.
Mm-hmm. First of all, of course, you're right, and the state banks, according to that wise person, apparently are like bulldozers with their handbrake off. But the fact is that they are there, that they're doing that because they've improved their customer service, they've improved their products. The foreign banks, are finding them real competitors. So my question to you is, it's a question that you can, I'm sure, have an answer to, but why is it that you're so negative about state bank market share growth if the state banks are actually producing the product, creating the opportunity, supporting the economy? They've got new management in there, they've hired a lot of people from Western banks. What's so bad about this?
No, I would take issue that the efficiency was massively improved. It was Western standard, let's say. The base from which they're starting to, from which you're judging them on, obviously there's movement forward, but the base is so low as to be an irrelevance. I think, Sparebank and VTB are still nightmarishly. I would never go into a branch. It would just be, you'd be there for days. I don't go camping that much. But I do take your point that they brought in Western management, but I'm not a great fan, and I don't know how many state enterprises you can hold up as world leaders. If I look back over time, there aren't many, and they generally last. They burn bright. They're phosphorus, and they die very quickly. So I would say that the emergence of the state banks as being the example to which banks should aspire to is not necessarily a great goal, because their efficiency still isn't up to even Spanish standards. Yes, they've got product, but if you're an investor, if you're a customer in Russia and you want to invest, the product ranges that you have available are farcical. We talked about savings earlier on, of savings within Eastern Europe. One of the problems is that if you're a Russian citizen in Russia, if you want to buy international securities, it's a bit of a pain in the ass. And as a result, you can buy Gazprom and Sparebank and VTB and all these other state enterprises and other things on MySex. But if you want to go and diversify your savings into Asia, the growth areas, or Latin America or something like that, it's almost impossible. And so, yes, it's moved, but there's a chasm that it has to overcome.
Yeah, I just so that I am clear about it too, is I think the danger with state banks, if they get above a certain size and they keep growing market share, one of the advantages of having market share that isn't massive is that you maintain aeration in the system, and that it's constantly forcing you to develop new products and improve efficiency. Once you've got a monolith, it's obviously, the danger is that it becomes too comfortable, and then you end up with a problem. So
absolutely. Especially on the capital market side. We've seen Sparebank and VTB are now dominating completely all the deals that are done in Russia. Yes, there'll be Merrill Lynch or Goldman Sachs on the boilerplate as well, but every deal that's done now has one of those two banks. That is not good for the market. You want independent banks. You want independent investment banking advice as well.
Okay, thank you very much indeed, sir.